US equity markets just received a big boost following another strong NFP data release, guys. So literally, you remember, in early June, we got the data for May. Massive beat on expectations, 2.5 million jobs created. Expectations were for job losses of 8 million, so we saw risk on. Going into today's NFP report, markets were seeing if that positive momentum that we saw in May could be continued into June, and apparently it was. So 4.8 million jobs created. Expectations were for 3 million, so another decent beat on the headline. 1.8 million beat. Massive beat, to be honest, when you think about it. Although obviously compared to last month's beat, which was 10.5 million, a beat of 1.8 million seems a little bit smaller now, but still, it shouldn't. Massive beat, very good performance. And obviously, strong headline meant that we saw another decent drop in the unemployment rate. Unemployment rate now down to 11.1%. Just note though, you know, headline very strong for this data, but there were just two small negatives that I really should point out. The first one is permanent jobs decreased in the US by over 500,000. So it looks like, you know, those 4.8 million jobs that were created, that was mostly, you know, temporary jobs or part-time jobs. So, you know, obviously we want to see permanent jobs getting created, because those are the people that get higher wages, you know, more longevity in their career, and it basically shows that the economy is on a firmer footing. So that's a little bit worrying. The other thing is, not really sure what happened with this, but the BLS, the Bureau of Labour Statistics, put in their report that there was actually some element of misclassification of people when they were compiling the unemployment rate. So they actually think the unemployment rate might be 1% higher, so 12.1% instead of 11.1%. Nonetheless though, none of this takes away from the fact that the headline beat expectations by 1.8 million, so really good. And we did see that pop higher in stocks as a result. Just S&P 500, for an example, popped higher by about 20 points. Dollar, another mixed reaction, because remember, you get that risk on flows, which is a dollar negative, but then you get those, you know, good US data. So it's like more optimism about the US economy, which is a dollar positive. So those two have cancelled each other out. Dollar, you know, shortly, in the immediate aftermath of this data, trading roughly flat. And gold has been hit, and some other havens like US bonds, German government bonds, all of them been hit as well. That is pretty much it from me for now, and I will see you in the next one.